volume. This is one of the most essential parameters that can make or break any trading strategy. Incorporating the right volume analysis method into a trading strategy can improve its win rate immensely. And that is exactly what we're gonna do in this video using a volume indicator called volume composition. When used correctly alongside other confluence factors, this indicator can filter out the majority of the false signals produced in any strategy. If you end up finding this video helpful, remember to leave a like, subscribe to the channel, and turn on your notifications to never miss out on future trading tips. Without any further ado, let's get into it. Now, as mentioned earlier, this indicator is called volume composition. To use it, first of all, you want to go to TradingView. If you need to sign up, link will be in the description. Next, you want to load any forex pair or trading security that you like. For me, I'm going to be using the GBP/JPY on the 5-minute time frame. Then click on Indicators, type in Volume Composition, select this one by Quantify Tools. So this is the Volume Composition indicator, and I think it's one of the best volume indicators on TradingView. The Volume Composition indicator provides a more nuanced approach to volume analysis. It breaks down the volume into various components, allowing traders to understand the nature of the volume in greater detail. This indicator provides the following information. Total volume. This is the total volume of trades executed regardless of whether they were buy or sell orders. By default, this is represented by this gray node right here. Dominating passive volume. This is the volume that has the majority whether it's buy or sell. It's represented by this dark green node for buy volume and this dark red node for sell volume. Then we have dominating active volume. This is the volume that has the majority but only considering active trades. Active trades are defined as those where the volume is higher than the previous bar's volume. These are represented by a light green node for buy volume and a light red node for sell volume. Next, dominating passive volume as a percentage of the total volume. This shows the proportion of the total volume that the dominating volume represents. Last but not least, we have dominating active volume as a percentage of the total active volume. This shows the proportion of the total volume that the dominating active volume represents. This indicator classifies volume as buy or sell based on the direction of the price movements in lower timeframes. It further classifies the volume as active or passive. Active volume is when the volume is higher than the previous bar's volume, while passive volume is when the volume is lower than the previous bar's volume. The volume composition indicator fetches volume data from lower timeframes that is automatically adjusted based on the timeframe that you're using. So for example, if you're using a 30-minute chart, it fetches the volume data from a 1-minute chart. And here are the rest of the chart timeframes with the corresponding volume timeframes. This indicator also allows you to choose the source for determining the buy and sell volume. So for example, you can choose to use the closing price as the source. If the current closing price is higher than the previous closing price, that would be considered as a buy volume. You can also replace this with the OHLC4 average, which would determine the volume direction based on the OHLC average. And of course, we have other options as well. The volume composition indicator provides a visual breakdown of the volume composition. So right here, it shows the symbol and time frame used for the calculations. Then here, it shows whether the dominating volume threshold has been exceeded. And then here, it shows the dominating volume threshold as a percentage of the total volume and the dominating active volume as a percentage of the total volume. It also shows whether the dominating active volume threshold has been exceeded, like this. This white line right here is just a 20-period simple moving average plotted on top of the volume composition indicator. You can change these settings to whatever you want, but for this video, we're just gonna leave everything at default. So based on all of this, I know you may be thinking,
so how are we gonna be using this indicator to trade?
Well, I'm gonna show you. But before that, what broker do you guys use to trade? Personally, I use PineTrades. As you can see here, this is my trading history. I mainly scalp gold. And up here, you can see that it's actually a live account. The reason why I love PineTrades so much is because of their extremely low commissions and spreads. On Forex, for example, the spreads can go as low as 0.0 pips, which is the lowest it can go. And for those of you that love high leverage, guess what? HenkoTrade offers a maximum leverage of 1 to 500. And if that's not enough, they're also going to give you a 100% bonus for all your deposits up to $25,000. So if you deposit, say, $34.50, they're going to give you a bonus of $34.50. So now you'll have a total of $69 to trade with. To access the bonus, as well as all the other perks, sign up to HenkoTrade using the link in the video description. Now, back to the video. To take a long trade with this indicator, here is how we're going to do it. We're going to look for a volume bar that closes above this white moving average, and that bar should have 3 different colors: gray, dark green, and light green. Also, at the bottom of that bar, these 2 numbers should be 70 or above. Having the bar above the moving average indicates that the total volume in the market is high enough for us to enter a long trade. Having the dark green number at 70 or above indicates that the dominating passive volume, represented by this dark green node, is above the minimum threshold of 70%, which is also represented by this dark green square at the top. And then having the light green number at 70 or above indicates that the dominating active volume, represented by this light green node, is above the minimum threshold of 70%, also represented by this light green arrow at the bottom. In simple terms, we're just going to look for a volume bar that closes above this white moving average, and that bar should have a gray color, a dark green color, and a light green color. And then at the top, it needs to have this dark green square, and at the bottom, it needs to have this light green arrow. If that's the case, we enter a long trade. Here's another example. The volume bar closed above the moving average. The bar is composed of 3 colors: gray, dark green, and light green. At the top of the bar, there is a dark green square, and at the bottom of the bar, there is a light green upward arrow. We enter a long trade. For a short trade, it's going to be the complete opposite. So we're going to look for a volume bar that closes above this white moving average, and that bar should have a gray color, a dark red color, and a light red color. And then at the top, it needs to have this dark red square, and at the bottom, it needs to have this light red upward arrow. If that's the case, we enter a short trade. Now, bear in mind that this indicator should not be used alone, because just like any other indicator, it can produce lots of false signals if used on its own. To craft our strategy, let's add one more indicator to the chart. On the indicator search tab, type in market bias. Select this one by Professor X. Double-click on the market bias indicator, and on the inputs tab, change the smoothing to 50. Then on the style tab, we're going to disable this first option. Click OK. Now, I know the addition of the market bias indicator may lead you to wonder.
How exactly are we going to use this indicator in conjunction with the volume composition indicator?
Well, the market bias is a trend confirmation indicator that can also be used to identify pullbacks in the market. Because of this, we're going to be using it for exactly that. Identify a trend, wait for a pullback, and then enter the trade. Let me show you an example. To take a long trade, first, the trend ribbon of the market bias indicator should be colored dark green to indicate a pullback in a bullish trend. Second, for the volume composition indicator, we want a volume bar to be printed, and that bar should have the same characteristics that we discussed earlier. Do you remember them? Basically, we're just going to look for a volume bar that closes above this white moving average, and that bar should have 3 colors: gray, dark green, and bright green. And then at the top of it, it needs to have this dark green square, and at the bottom, it needs to have this light green upward arrow. Now, you might be thinking,
And why did you activate that next candle? Are you trying to see if that trade is gonna lose so you can skip it?
No, of course not. The reason for this is because this dark green square at the top is only going to be printed at the open of the next candle. So this next candle has to open for this square to show up. I know it feels like we waited for the whole candle to close, but in a live market, the green square will show up at the first instance of the next candle opening. So just to recap the conditions, the trend ribbon of the market bias indicator should be colored dark green. On the volume composition indicator, there needs to be a volume bar that closes above this white moving average, and that bar should have a gray color, a dark green color, and a bright green color. And then there needs to be a dark green square at the top and a bright green arrow at the bottom. All our entry conditions are met on this candle, so we're gonna enter a long trade at the open of this next candle. The stop loss is gonna be set below the most recent swing low. And for the take profit, we're gonna set it at 2 times the risk. We let this trade run and take profit. Here is one more long example. The trend ribbon of the market bias indicator was colored dark green. The volume bar closed above the white moving average. The bar is composed of 3 colors: gray, dark green, and light green. At the top of the bar, there is a dark green square, and at the bottom of the bar, there is a light green arrow. We enter a long trade. For short trades, we're just going to reverse some conditions. First, the trend ribbon of the market bias indicator should be colored dark red to indicate a pullback in a bearish trend. Second, for the volume composition indicator, we want a volume bar to be printed, and that bar should have the following characteristics. First, it should close above this white moving average. Second, it should have 3 colors: gray, dark red, and bright red. Third, it should have a dark red square at the top and a bright red arrow at the bottom. And remember, in a live market, this upper square is only going to show up at the open of the next candle. That's why we have this candle right here, but all the entry conditions are met on this candle. So here is where we're going to enter a short trade. The stop loss is going to be set above the most recent swing high. And for the take profit, we're going to set it at 2 times the risk. We let the trade run and take profit. This is just one of the many strategies that you can do using the volume composition indicator. Go ahead and take a look at this awesome tool and see what other strategies you can come up with. If you have any questions about this specific strategy, let us know in the comment section below. That's been it for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.